get some insights on the news shaping the markets, and for that we welcome in Mish Director of Trading Education and Research at MarketGauge.com. Good to see you, Mish. Thanks for being here. Look at what's happening with the market. We got another hot print, CPI print this morning, and now Fed funds futures are betting on 75 basis points on both meetings in November and December. Your thoughts?
Well, I think that's probably accurate. Really, the Fed is looking at the numbers and realizing that they have to keep the course. They haven't said anything but that. So there's no reason for all the pivot hopers to think that they're going to pivot at this time. But to me, that's kind of beside the point. The real point is even with all of the talk of the raises, clearly there are aspects of inflation that have yet to be controlled, and you wonder, can you raise rates enough to control demand for basic goods like food? I mean, butter was up like 27% year over year, eggs, bread. These are things that aren't going to go away anytime soon. So if I try to step back a little bit and not really focus so much on the Fed and so focus so much on the levels in the overall stock market and really think more about what I'm looking at to see if we get to another phase of, besides the fact that we are completely skeptical about everything right now, more of a disorder. That's kind of my biggest fear, Nicole. That's what's kind of keeping me up at night is what happens, how far can people be pushed at this point? And the governments and the Fed aren't really helping at all.
Yeah, it's a very fair question about whether or not the Fed moves can really tackle inflation at this point, because we're seeing across the board, I mean, you're still seeing financial services and insurance and medical care, travel, accommodations skyrocketing, and folks are changing their behavior. We've already had on a guest who was an expert in this on travel, talking about the fact that people are either now choosing to drive, or if they're flying somewhere, they're doing fewer nights because it's just so expensive, right? Are you seeing change in how the consumer may behave, and what does that mean for the market, the economy?
Well, this is, I see that's certainly happening, but I just traveled from Seattle and the plane was packed. The lines for the security were at least a half an hour long. And then even in my little city of Albuquerque, New Mexico, there were lines of people to get on a shuttle to get to their cars. I've never seen it so crowded. So I'm not quite exactly sure that it's really hit as much as people think it might in terms of things like traveling. I do see differences, though, in shopping. We went through a few stores. I love to just kind of, have boots on the ground kind of thing to see, and everything's on sale, and people are not packing the stores. The holidays could be another real sobering impact on the market. But I think there's a couple of things I'd like to say that people have to watch out for. Number one is obviously not so much the 2-year and the 10 years. We know those yields are going to get jacked up. But what happens with the 20-plus year bonds? Because they obviously have yields have gone up and the TLTs have fallen. But at the same token, if that flips to where the point is that becomes a hedge or a safety play, that could be some trouble ahead for the market and inflation. Number two would be the dollar, of course. The dollar obviously has come off from the highs. It's still relatively tight. But if we start to see any unraveling of the dollar, then I think you're starting to see that sentiment shift of we just don't trust anything. And the other, obviously, is what happens here with these pension funds. And they're having trouble meeting their payments at this point, and this could be a global situation. So I'm not by any means calling this a bottom. I just think right now there are certain areas that you could look at if you are a longer-term investor. Maybe you can take a nibble, but you still have to have really good risk parameters.
Yeah. I want to get to some of the names and your stock picks. There's such a variety in these names, from Cheesecake Factory to Coinbase to Rivian and J.B. Hunt and Paramount and Capri. Is there a theme among them, or is it just picking and looking at each chart?
Well, it's both, actually. So one of the things that I'm also just looking at price in terms of risk reward. So let's just take one of those areas, cheesecake, because you and I have talked about that several times before. and it's trying to bottom here. Cheesecake is a typical type of restaurant. It's all over the country. And even though people might be feeling the pinch of inflation, I still see long lines in certain cities waiting to get into the Cheesecake Factory for breakfast, lunch, and dinner. So, that could be a stock. If it holds here above the 30, I think it was trading at about $32 last I looked today, and the market can kind of stabilize, you can at least say, I have a good idea of where this thing should stop, and you could take a little bit of a nibble here for sort of a longer term portfolio. Rivian is much more speculative, but in terms of electric cars, no matter what, we know it's hot. Their price point is still around $66,000, so it's not cheap. But on the other hand, there are still a lot of people who have Rivians on order, and even though they recalled all their cars, their second round of cars that'll be coming out in 2023 should have a lot of those problems fixed. And then if you go on, in terms of Capri, luxury items are always something that wind up doing well, even sometimes in hard times, because people who aren't necessarily impacted by inflation will continue to buy their Jimmy Choos and their Michael Kors. And and J.B. Hunt is a transportation company. So in terms of what's going on right now with all these things, the reason why we're watching it is because the Russell 2000 broke the June low today and immediately popped right back above it. And I like to look at that because everybody thinks that we're going into a deep recession. But if we're going into some kind of stagflation, there'll be companies that might be good to invest in, while others, of course, would be good to stay away from. And like I said before, watch that dollar and watch those long bonds. Those are going to be real big clues going forward.
Mish Schneider, it's great to see you. Thank you so much. I like your boots on the ground checks too. Always a pleasure to have you on the show. Mish Schneider, Director of Trading Education and Research at MarketGauge.com. Thank you.